Welcome, Maverick traders. Welcome out to your currency midweek update for January 4th, 2023. Hard to believe that we're already into the new year. Let's get to it. As always, just a quick reminder to make sure that you follow your trading plan. We're going to do things a little bit different today in that I'm going to go through a lot of different charts. When you flip the calendar over, it's a new year, it's a dawning of a new day. We want to look at everything with a fresh perspective and try to make sense of things kind of piece by piece. So I'm going to spend quite a bit of time in the charts here in a bit. But first, let's just talk about where the markets are at. I think we're in the midst of a correction that still plays out to the upside. I talked about that for the past couple of weeks. We'll discuss that more. US dollar is probably going to be choppy around that critical 104 level. That has been a key level for many, many years. The yen put in a major low. There's some real changes happening in the yen fundamentally as far as them changing policy and so forth, and that has room to go. And then last but not least, on the economic side, we're finally getting some reports. So towards if you look at last week, there was nothing. Literally nothing scheduled. It's holiday break, New Year's, and so forth. Today, for this week, there's been a little bit in the Swiss area. CPI came in at negative zero point 0.2 versus the negative zero point 0.1 expected. So a little bit of a slowdown in CPI, which is good news for the markets. As we look at weekly performance, we are rallying. There is some risk taking going on. Oil's getting absolutely blasted, but everything else is holding up relatively well from that standpoint. Now, the first chart we're going to look at today is of the S&P 500. And this is a barometer of risk taking, risk on versus risk off. And here's basically the thesis that I started to lay out. I kind of changed. I was bearish on the market here at this downtrend line. And then I changed my tune a couple of weeks ago, and I really think that we've set a low that we're going to trade up off of for a while, for a couple of weeks at least. And here's basically my thesis and kind of how the pieces of the puzzle came together. First, I really think that we've fulfilled the downward slide. If you follow Elliott wave principles, we kind of had a normal 5-wave downward trend, right? That's the bear market. I've come to think normally a correction in ABC will come back towards about the 4th wave. And it's possible that this was the ABC, but I've changed my opinion and kind of think it's bigger than that. I think it's going to be like this: A, B, C. So that's my outlook. That's my expectation. And part of that is a move above this downtrend line will set the market in a frenzy. It will set everyone saying, hey, the downtrend is done, the bear market's over, we're up and away, and so on. And I think that's going to be a sucker's move. I think that's going to be a fake move in essence when it's all said and done, because this might be a really ugly deterioration thereafter. But this has been a severe downturn, and these things take time to play out. And I think time is one of the biggest components that the market needs. The market stole away investment returns back here. It basically bubbled over. If you look at what happened in the crypto markets and NFT, it's all symptoms of the same problem. That there was too much easy money, too much free money, zero interest rate policies, etc. We had unprecedented money printing where M2 money supply was increasing by trillions and trillions of dollars. We went from 3 trillion to 7 trillion in a heartbeat, seemingly. And that fuels unnecessary upside and kind of ridiculous behavior. And now we've got to pay the price for that. We probably do that over time. I don't think it's a collapse. Instead, I think we ultimately have a lot of fake moves like this one, where people will get sucked into the optimism and then quite a big deterioration that follows. And ultimately, I still think we're in a bear market, but this is my operating thesis. This is kind of the expectation that I have. So one could say that I am bullish on equities, so I am risk on, as we've talked about, over the next few weeks. We touched on this last week and so forth. I think there's room for the markets to continue. And if you follow this outlook into the FX markets, you'd be more bullish on Aussie and Kiwi and CAD and things like that. Maybe not CAD just because of the deterioration that's happening in the energy markets, maybe a little too much correlated there. So I would focus my attention more on these, but make no mistake, I think that makes sense. I think that the Aussie can rally a bit more, that the Kiwi can rally a bit more. Now, ultimately, do I think that markets decline, deteriorate? Yes. Do I think that these things are rallying versus something like the yen right now and should be? Like today, they're rallying sharply against the yen. I think that makes sense. And I would, from a short term perspective, expect that to continue. But on a longer term basis, I think the market's going to get clubbed upside the head and head here later on. And so ultimately, this huge deterioration that follows, that comes later, but I think that's when you want to be aggressively buying the yen, is more in that period. So we're a bit of time away from that. This isn't the big trade. The big trade will probably be that short setup ultimately. And that's the picture that I've painted. That's the way I think these things play out. And there's multiple reasons for it. There's extreme pessimism in the equity markets. Put to call ratios, for example, hitting new record highs, meaning people have loaded up on puts expecting the markets to collapse and so on, which basically tells you the sentiment is so bad that this is where markets tend to rally. Everyone's offside. If everyone thinks the same thing and they're all ready positioned for that, there's no one left, right? Who's left to sell? If everyone's pessimistic, they've all already sold already. They're already geared up for it, and that's when it comes violently the other way. So there's more of those factors in place where look at the rally today, sort of unexpected by many, not unexpected by me. I really think that continues to progress a bit further here. So this week's price action is following more of what I would personally anticipate. I expect this to continue in the short term. These two, or pardon me, not CAD is rallying. These two would be my preferred. Aussie and Kiwi here would be my two preferred currencies to kind of take a closer look at. Now, I want to go spend some time in some charts, like I said. Let's pull this up together. Let's just go through a wide variety of charts. Starting with the currency markets and a couple of key notes. First of all, this is a long-term chart. This is a weekly time frame, meaning that each one of these candles is one full week's worth of trading, right? This is a full week. This is a full week. So if you look, here's the start of 2022, okay? Here's what we did for throughout that year. You can see that we initially dropped, then we popped, then we dropped, then we dropped, then we popped. It was a choppy year for the Kiwi, right? Really long term. Ultimately, look at how we're kind of wicking off the bottom. I think the Kiwi should rally for a couple more weeks here. Now, do I think it's up and away long term? Perhaps not. But again, I'm in a little bit more of a risk on mode. So really long term chart. I think we should rally a bit further here. Look at the Aussie. Again, super long term, staying on the weekly. Maybe the Aussie could get as high as coming up to meet that downtrend line. Perhaps that's possible. Let's redraw. Let's remove those because this is an older trend line. But if you kind of drag that in place, something like that, we could, whoops, snap it in place. We could certainly, and that's frankly, what I would expect is kind of a rally here over the next couple of weeks towards that downtrend line. CAD, I don't have at the top of my list because CAD, unfortunately, although it's having a decent rally right now, frankly, you do have to be a little bit concerned about what's happening in the energy markets. Now, having said that, the gold and precious metal markets are picking up the slack. So gold's going up and oil's going down. They're very much dependent on, let's say, all of the above, right? Precious metals, some of the biggest gold mining companies like Barrick Gold, Gold Corp, etc. Agnico Eagle Mines, they're in Canada. It's very resource rich. So there's maybe I'm being too harsh. I would frankly expect it to rally and rebound back, but might not be my favorite. Pound on the weekly time frame again looks like it can rally a bit further, kind of wicking off of the bottom. Euro is kind of rolling over a bit. Swiss franc kind of rolling over a bit. Those two a little bit more correlated. And again, usually Swiss franc and yen and US dollar are more defensive. So Swiss franc should kind of come down over the next couple of weeks if we're in a risk on environment. Japanese yen should come down a bit. See how it's rolling over? It should come down a bit for the next couple of weeks. Now, ultimately, should it go zooming right back up? Probably so. If I had to draw my yearly outlook and expectation, I would think that most of the yen's downturn happens right here at the start of the year for a couple of weeks. And then there's some form of expansion here in the yen. And I don't know exactly what it will look like, but at some point this year, would I anticipate that the yen will be up here at quite a bit higher levels? Absolutely. I think getting into, probably gets choppy once it kind of meets this area, but that's probably, where the yen is going, in my view, is we've got some pretty substantial upside longer term. And then the US dollar, again, it's kind of bouncing around its 104 level on the Dixie, on the dollar index, and that's always a critical spot. And I think that it will probably just be choppy around that level for some time. So I'm not super inclined to do much of anything with the US dollar specifically. But that kind of gives you some insight. Let's pull up the US dollar index because it's kind of interesting to look at. If you look at the 104 level, here's the 104 level on the dollar index, and when it hit its high in 2017, it retested that high on the COVID spike. It finally broke through last year, and now we've come down and kind of squished into that support. It makes sense to me that while it will probably be choppy for the next few weeks, what I'm laying out is an idea that I'm bullish on the markets short term. So I'm risk on in the short term, but ultimately I expect there to be a reckoning. That is more bullish for the US dollar. So if you make me choose here, do I buy or sell longer term? I'd be a buyer. And the setup for that still looks pretty good. We've kind of come down, squished into support. Remember, support is often like a mattress or almost like a trampoline, where when you bounce, the trampoline squishes down and then it shoots you back up. It's kind of what the dollar's doing, and I would expect that there will be some rally, even if what it's ultimately going to do is maybe something like this. What happens after this much volatility is often some sort of what we call a volatility contraction. Okay, a volatility contraction. And what is I don't even think I spelled that right, but what is a vol contraction? Well, it's a compression of volatility. So it's a series of lower highs and higher lows, right? You compress down, lower highs, you compress up, higher lows. And that's probably what we're going to kind of do here for most of this year, is some sort of volatility compression type of scenario, contraction of that. And the next phase of that should be an upward slide, right? So we rally up and then we roll over, and then we rally up and then we roll over. And by the end of the year or so, we're kind of in that compressed area. My best guess is, if I had to give my predictions for 2022, and we always do a full year forecast and do some things like that, but just kind of speaking for myself, which maybe is different than every other trader. I don't know. We try to avoid group think, right? We don't want to, frankly, I trade my own book, right? I don't, I'll obviously listen to other people. I'll try to poke holes in my thesis, see where it's vulnerable or whatnot. But ultimately, I trade my own book, as everyone should do. And there are times where we're going to have different opinions on different things. What's interesting is we can both make money. And this is something that's very important, that I could be bullish on the US dollar and you could be bearish, and we both make money because maybe we're seeing different time periods. I'm saying, well, I think the dollar will be up this year, and you're saying, well, it's already gone up to here, and now you're shorting it. You make money on the downward slide, I make money on the upward push. Different time periods, right? You might be trading for a couple of days, I might be trading for a couple of weeks, and we can both make money with the exact opposite strategy. So anyway, ultimately, my expectations for this year become more risk off, but not yet. We're not there yet. I think there should be more advance in equities. There should be a little bit more of the risk on environment. And we'll see if we can go up and puncture that downtrend line in the S&P. That would be really um, pretty good and pretty awesome for markets that way. Now, if we come into shorter time periods, you look at the daily chart of something like the US dollar, and it's just, that's, speaking of volatility compressions, that is contracted. We've spent the last couple of weeks going nowhere. Does it look like it's maybe going to go down a bit further? Probably should go down a little bit further, right? Because we're in a risk on environment. So the dollar usually doesn't flourish during those periods of time, but wouldn't be at the very top of my list for trading on either the long or the short side. But pairing it up, being a little bit negative on it probably makes more sense than anything else. Now, let's look at crypto markets. So again, we could come into the weeklies. I don't know that they're as valuable in this situation. We know it's been epic collapse, and now we're just bouncing along the bottom. If we come into the dailies on the crypto markets, you're in this huge consolidation. Again, it's a volatility compression. It's that sort of idea. After the hurricane passes, there's this weird quiet that kind of comes through the markets, isn't there? I've lived through a couple of hurricanes. I lived in the Virgin Islands back in the late 90s. I lived in Puerto Rico during one that must have been 1998. And anyway, that particular hurricane was, we were holed up, and that thing came through, and it was a devastating blow to the island. It's been hit numerous times. It seems to be kind of a sitting duck island out there, unfortunately. But power was down, water inside of homes. It was just a mess for some time. We went around, and roads were out and so on. But there's this weird kind of quiet after the storm and after it all passed, because nobody's driving around and so on. It's that calm before the storm. It's the calm after the storm, I suppose. But that's kind of, we had this massive storm, and now there's kind of this quiet period. Does crypto break out of this? Yeah, I've long held the expectation that we're more likely to go down than up, but I do have to give credit where credit is due. It's trying to move higher. And frankly, with a risk-on environment, we probably should move higher. I would feel a little more comfortable with Bitcoin or Ethereum if you wanted to trade that. But for me, I'm not super interested. I don't really play breakouts that go counter to a lot of trend, right? We always talk about this is a lot of overhead supply. These are all people that bought at bad high prices. So as this thing tries to break out, it just runs into disgruntled owners from the past that sell, and it just keeps a lid on things. So crypto has massive overhead supply. That becomes a problem. So if I were trading it, I'd be more buy the dip if you wanted to buy than trying to buy the breakouts. The breakouts will probably be a lot of false breakouts. Every once in a while, you'll get a good one that breaks and runs, but when you have that much overhead supply, a lot of times it's just fits and starts. You try to go and then you fail, and you try to go and then you fail, and so forth. Let's go through a couple others. If we look at international markets, VT, this should follow with equities, probably a little bit better, frankly. So the international markets, I think you, again, have a similar dynamic. Let's spread this out a bit. You have a similar pattern, but the good news for international markets is maybe that we've already had some of the worst of it potentially, where we've if you look at the trend line, the rebound was a little stronger. The ricochet back up, I feel like it's already starting to kind of bottom out. You're seeing that like today in China. China's up huge, where U.S. equities are up a little bit more. The international market's just in a better spot. And that's the first time we could say that in a very long time. So, but it still speaks to risk on. It still follows that same thesis and that same expectation. Let's see, a couple of specific pairings. So I don't mind being short US dollar against maybe an Aussie, a Kiwi, something like that. So we'll start there with a couple of idea trades. So here is the daily. Now, here's my problem with these. It's the same type of problem we had with crypto. A lot of recent overhead supply. You have been in a hellacious downtrend in the Aussie versus the US dollar. So what happens when it tries to break out? It encounters disgruntled former buyers, right? So this is not something I would rush into on the buys. Maybe what happens here with Aussie USD is a little mini cup and handle or something like that. Maybe we dip back towards 68 tomorrow, and you can buy it there for a trade. And as it tries to break out, expect it not, who knows? Maybe it'll blast off, but that's not normally how it works. Expect it to be somewhat of a pop and a quick drop, kind of a failed move. And then you might have another opportunity to buy the dip, and it's going to be a lot of that mode. These have too much overhead supply to try to trade them with a lot of momentum, in my opinion. Kiwi USD, same general problem. As we look at the chart, a lot of overhead resistance. The nice thing about Kiwi USD is it's already in the dip. So if I were going to buy one right here, in essence right now, I would be leaning more towards Kiwi. And interestingly enough, you do have to give credit where credit is due. The CAD is having a great day, even with oil not so much. So, again, here it's the opposite. You got a lot of underlying wanting to be buyers, right? They want to buy back their bad shorts. So we don't really play a lot of downward breakdowns when you have a lot of underneath support. Instead, if we get a little bit of a chop tomorrow, this is a daily chart, break this big candle into 4 parts, There's 4 sections. You're kind of trading it on a bounce back up here. Probably in that area is kind of where you're looking to get short. At maybe 135, 40-ish, 135, 40 or so on this US dollar CAD pairing. Something along those lines would be kind of where I would be looking at that on this chart. So those are US dollar crosses, potential trades. In addition, if you wanted to trade these against the Swiss franc, I think that kind of makes sense as well. So let's come into these crosses here. Aussie Swiss franc, you got massive amounts of overhead resistance, so no thank you on the breakout. But as it pulls back, I could be a buyer. Kiwi Swiss franc, it's a little bit, you do have to be concerned it's lagging. And I think Aussie is the best possibility here in the short term. Kiwi makes me a little nervous just from the lag effect. CAD is kind of impressive. The more I think about it, the more I'm kind of leaning towards trading the CAD because good price action when it theoretically should have bad price action. That's a very good, that's something we call a market tell, right? It's kind of like in poker, they call it a tell, where somebody gives information that they don't want to give, by a facial expression or their breathing or whatever it may be, and the other people at the table can pick up on that and get information. Well, that's kind of what we're at with the CAD is, hey, it should be acting poorly, and yet it's acting pretty well. Maybe, I'm going to change my tune a little bit and kind of think more about buying the CAD. And sometimes as a trader, this thought process and kind of working through things leads you towards the trade. I mean, I think we've got to buy the CAD. There's massive amounts of overhead resistance. So you buy it on the dips, but look at the CAD very seriously. The more I kind of talk it through and think about its great price action today, I'm going to probably buy a dip here in a CAD pairing against the US dollar or against the Swiss franc. I still don't want to be short the Japanese yen. That's just, for me, it's not an area that I want to get short. There's too much risk to further changes from the Bank of Japan. The next really, really historically big trade might be a long yen trade. I think it's too early right now, but ultimately, I think that might be where as Wayne Gretzky says, where the puck is going, and we want to skate to where the puck is going. So on our schedule, you can see here as far as upcoming events, we've got trading crypto on TWS, we've got the currency recap tomorrow, and we've got tax prep. All of those videos coming out. Tax prep is live, so you want to join us, you're welcome to do so. U.S. payrolls come out on Friday. That's the non-farm payrolls. And then, like I said, today we've got the FOMC meeting minutes. Those come out shortly. And the FOMC meeting minutes are not usually, that's coming out in about 30 minutes, it looks like. So be aware of that. That's more of a US dollar mover. Usually the minutes are not super impactful, but right now the markets are so keen on what the Fed is going to do, how they look at inflation, how they look at the economy. Are we going to keep rates higher for longer? Where is the Fed at, and are there any changes to their discussion? The minutes can shed light on that because it's ultimately their talking points and what they're discussing and what their opinions are. So expect some movement here in about 30 minutes on that news. Let's take a look here. We had one more request for dollar CAD, and let me jump to that before we wrap up. So dollar CAD, let's look at that chart together as requested. So I'm on the daily chart, and you can see the big drop in dollar versus the CAD, okay? That's primarily CAD strength more than anything else, right? We still have the problem of too much underlying, so I don't want to trade a lot of momentum here. I would do the same thing. I would kind of break this candle into 4 parts. and you're probably shorting somewhere in this area. Just on a little choppiness. It could come throughout the remainder of today, probably later tonight, something like that. As it gets up here to, what would that number be? That's probably, let's see here. That's probably about 135. If you look at my crosshairs, I'm going to call it 135.38, 135.40-ish. Okay, 135.40 or so on this chart is probably what we're looking at there. So if that's, as a potential kind of idea and concept there, that might be where we're looking to get short the US dollar against the CAD. And if you come into some shorter time periods and you think about that, here's the 12-hour chart at around 135.40. You're probably in a little bounce here that ultimately can fall. Kind of a little mini inverse cup and handle. It still fits. If we come into the hourly time period, okay, looking at this initial plunge to the support, okay, here is the plunge down. This is your big inverse cup, right? A bounce back up to 135.40 or so creates the handle. Ultimately a bearish price pattern, and all of that really should fit. I really like the idea. I mean, 135.40 or so for short dollar CAD looks like money to me. So that would be right up near the top of the list for me in terms of trading. So great question there. All right, we'll leave it there. Thanks everyone for joining us. Have a great rest of your day. Any questions, let us know, and we'll see you next time. Goodbye, everyone.